Let me show you something that really surprised me. My wife and I drive this 2024 Toyota Corolla Hybrid. We do the same school runs, same grocery trips every week. When we filled up with regular fuel, after 1 week, the gauge would be down to about 2 out of 8 bars, roughly a quarter of the tank left. When we switched it to premium fuel and kept the exact same driving pattern, we finished the week with half a tank left. So in 1 week, regular fuel used about 3 quarters of the tank and premium used only half. That's double the amount of fuel left over. That got the economist in me thinking, if Canada is one of the world's major oil producers, why are Canadians still paying so much at the pump? And why does fuel behave like this in the real world? Hi, everyone. I'm Isaac Jonas, a Zimbabwean Canadian economist. On Streetwise Economics, I take real life situations like filling up your car and explain the economics behind them in simple language. If you are about the cost of living in Canada and want clear explanations without drama or conspiracy theories, feel free to hit the subscribe and like button. It really helps the channel grow. Let's quickly break down what happened with our own car because that's the starting point. Regular fuel per week, we would start with the full tank, end the week with 2 out of 8 of the tank left. Fuel used would be 6 out of 8, equals 75% of the tank. Premium fuel in a week, we would start the week with the full tank, end the week with 4 out of 8 on the gauge, and that is half of the fuel left. Fuel used would be 4 out of 8, that is 50% or half of the tank. So in our case, regular fuel, about 75% of the tank gone in a week. Premium, about 50% of the tank gone. That means for the same weekly driving, we were keeping twice as much fuel in the tank at the end of the week on premium compared to regular. So now this doesn't mean that premium is magically cheaper for everyone. Price per liter is of course higher. What it suggests is that our hybrid engine seems to run more efficiently on higher octane fuel, especially with city driving starts and stops. That small observation sent me down a rabbit hole. How does gasoline pricing really work in Canada? What's going on with our oil production, refining, and consumption, both here and globally? So let's unpack this in a simple step by step. First, some geographic context. When we say Canada is a big oil producer, what do we exactly mean? The key facts are that Canada is usually fourth or fifth in the world in crude oil production, pumping about 5 to 6 million barrels a day, according to EIA.gov website. About 96% of that oil comes from just 3 provinces of Alberta, Saskatchewan, and Newfoundland and Labrador, according to Natural Resources Canada website. Alberta is by far the giant, accounting to roughly 80 to 85% of Canada's oil output. Saskatchewan is next, and then offshore production from Newfoundland and Labrador in the Atlantic. British Columbia and Manitoba produces small amounts on the fringes of the Western Canadian sedimentary basin, according to Canada Action. Most of Alberta's growth has come from the oil sands, which now produce over 3 quarters of Canada's total oil supply. These are heavy, thick crudes that needs more complex refineries to process, according to Oil Sands magazine. Now, this brings us to the refining problem. Now, the key point from what I've observed on social media is that some people don't realize that producing crude oil and turning it into gasoline are two very different businesses. Canada is strong in production, but our refining capacity is much smaller and not always designed for our heavy oil. So the data in simple terms is that Canada produces around plus 5 million barrels per day of crude oil, according to the Energy Information Canada.ca website. But the Canadian refineries only have the capacity for about 1.9 million barrels per day. And in 2023, they actually processed roughly 1.6 million barrels per day, according to Canada Energy Regulator. More than half of the crude processed in Canadian refineries is imported, not domestic, because refineries are configured for certain type of lighter crudes according to Natural Resources Canada. So even though Alberta is pumping record amounts of heavy oil, many of our refineries, especially in eastern Canada, are still importing lighter crude from places like the US or overseas, because that's what their equipment is built for. Think of it like we grow a lot of potatoes, but most of our kitchens are set up to cook rice. So this leads to a strange sounding situation that actually makes sense once you see the map. Almost all of Canada's crude oil exports go to the US, over 95% in recent years, according to regsec.gc.ca website. US refineries, especially in the Midwest and Gulf Coast, are designed for heavy Canadian crude and run at a very high utilization, processing our oil. That is according to atlasinstitute.org. At the same time, Eastern Canada, Ontario, Quebec, Atlantic provinces import refined gasoline and diesel, or imports crude that gets refined close to those markets, according to Natural Resources Canada website. So here is the geographic paradox. Alberta, Saskatchewan, Newfoundland, and Labrador produce the oil. That oil mostly travels south to the US. Many Canadians in Ontario, Quebec, and Atlantic end up buying gasoline that's tied up to US refinery output and global prices. From a consumer's perspective, it doesn't feel like it's our oil at all, because we are buying refined products priced on global markets, not on local production costs. So now let's zoom out from Canada and look at who actually uses the most oil in the world, because this demand side is a big part of what you and I pay at the pump. According to recent global energy data from Worldometer, the United States is, of course, the largest oil consumer in the world, around 19 million barrels per day. China is second, roughly 16 million barrels per day. Then come India, Japan, Russia, Saudi Arabia, Brazil, and a few others. Canada consumes around 2.5 million barrels per day, which puts us in about 9th place globally in terms of consumption, even though our population is much smaller than that of other countries, according to Worldometer website. So Canada is interesting. We are top 5 producer, a top 10 consumer, and we export a huge share of what we produce. That means Canadian gasoline prices are heavily influenced by what happens in the big demand centers, especially in the United States and China, and by the global supply decisions from OPEC Plus and other producers. So when you put it all together, the picture looks like this. One, geography. Most of oil is produced in Alberta and Saskatchewan, but most people live in Ontario, Quebec, and British Columbia. Two, our refineries are limited and configured for certain crude types, so we still import a lot of oil we refine. And when we look at the exports, nearly all our crude exports go to the US refineries. And then if we look at the global demand, prices are set in the world where US and China are the main consumers, not Canada. So in other words, the price is set by the United States and China, mostly, and OPEC Plus, of course. Tax and currency is another factor. Federal and provincial taxes plus a weaker Canadian dollar against the US dollar amplify global price moves, according to Natural Resource Canada. So when you and I are standing at the pump in Vancouver, Calgary, Toronto, or Halifax, we are not just paying for Canadian oil. We are paying for global crude prices, refining bottlenecks, transportation, taxes, and even decisions made in Beijing, Washington, Riyadh, and Moscow. So going back to our Corolla hybrid story, switching from regular to premium didn't change global oil supply or taxes. What it changed was how efficiently our specific engine used each liter. Regular fuel, about 75% of the tank used each week. Premium, about 50% of the tank used each week. That doesn't suddenly make premium a bargain, but it does show how small decisions at the household level interact with this big, complex global system. My hope with this video is that the next time you see gas prices jump, you will understand that's not just Canada's fault or one single policy. It's a mix of our geography, infrastructure, global demand, and the way the entire oil system is built. If you would like more videos where we take real life situations like grocery bills, housing, fuel, and unpack the economics in plain language, consider subscribing to Streetwise Economics and sharing this video with a friend. And also, you can book for coaching on investing and trading on www.streetwiseeconomics.com. Sports are limited. Thank you for watching, and I will see you in the next one. Bye bye for now.